Shares of Nazara Technologies and Delta Corp trade under pressure as sources say the government is likely to propose sweeping restrictions on online gaming companies under the upcoming Gaming Bill of 2025.
Shares of HAL rise in trade as sources indicate that Cabinet Committee on Security has approved the purchase of 97 LCA Mark 1A fighter jets worth 62,000 crore rupees from the company, marking one of its largest defense orders.
Lloyds Metals rises in trade after winning an extension of the coking coal mine across Madhya Pradesh-Maharashtra border with a 10% premium.
And shares of Eternal and Swiggy rise after DAM Capital initiated a buy rating on the stocks. The brokerage expects margin expansion along with strong free cash flows growth over the next 3 years.
Hello and welcome to Chartbusters. We're coming to you live from CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vinny Motiwala. And things are very quiet on the index front. We had 2 good days on the trot, and today markets seem to be consolidating and just moving sideways. So straight away, let's turn our attention then to the first corporate on the show, Galaxy Surfactants. The company is now joining in, and just to run you through the 3 main talking points. One is the supply chain impact due to geopolitical tensions, how they plan to navigate it, demand in Africa, West Asia, Turkey region, and the outlook on demand in India. To break this down, we have with us K. Natarajan, Managing Director and CEO of the company. Thank you very much, sir, for joining in. So let me start with the demand question, which covers the various geographies that you operate in right now. In Q1, you had a volume growth of close to about 5%. I think when we spoke last time, 6 to 8% was what you were hoping for in terms of a volume growth guidance for full year. Now, given the uncertainties in North America, the slow start to Q1, what is your guidance for the full year on volumes and EBITDA per ton?
Yeah, good morning. So thank you for having me on the show. Given that from the last time to now, the change has been in terms of the way the India market hasn't really fully recovered, although we see some green shoots in terms of certain policy decisions that the government has taken. The latest one being the GST rationalization. That augurs well for us, and that can be a real booster for the demand in India. So that's a good news. We do expect things to start looking up from H2. America, we had a challenge because of the tariff uncertainty. Many of our customers were going slow on the ordering because they weren't clear as to which way things would go. That continues even now, and we do expect things to be much clearer in the next quarter, and that should come back. Rest of the world, other countries are doing pretty well for us. Europe is doing well. Latin America is doing pretty well for us. Africa, Middle East has been flat, and that was more due to the supply challenges we had due to the geopolitical situation. That's improving now, and that augurs well for the coming quarters for us.
Right, Mr. Natarajan. Good morning. This is Vinny joining in the conversation. So that volume number, what could we be expecting in FY26? 8% around that mark is what we could watch out for? No,
we would further India market needs to really pick up. And that currently India growing at only about 3 to 4% for our customers as well. That would be a difficult one to achieve at the higher end. I'd be happy if we are able to touch the lower end of the band of 6% with India coming back. So I am hopeful about that happening.
Okay, hopeful about that 6% at least happening over there. Also, just in terms of freight rates, what is the outlook there as well? Given that there were some issues in terms of freight rates increasing there, container availability was also an issue. Has that started easing off? Has that started becoming better? And overall, how is that impacting your cost story right now?
The container availability, because of the tariff, the yo-yo situation in tariff, you have containers getting pulled in by China, some container unavailability in some sectors has been a challenge, but it is much better than what it was, say, in the previous quarter. Quarter 4 was pretty bad for us of the last year. It's much better, it's improving. Freight rates are started increasing in line with the demand surge that has happened to probably try to beat the tariff setting in. But that we see as temporary because things do, based on our discussions with the shipping companies, things should start getting better. But availability is certainly much better. We don't see much issues moving forward on the supply front.
India demand, I think you said was 3 to 4% in Q1. And you're hopeful for things picking up in the festive season. What is the volume growth for India that you anticipate?
India, I think we should probably should be in the zone of about 5 to 8%. But second half is what we need to wait for.
Got that. And US is, I think, 8 to 10% of your revenues. Is that correct, Mr. Natarajan? Can you hear me? Okay, we seem to have snapped that connection a bit. We'll try and reconnect, but that's Galaxy Surfactants saying that in Q1, the volume growth was about 5%, but because US is facing some challenges, India volume growth was only about 3 to 4% in Q1. For the full year, they're hopeful if the company can achieve a volume growth of 6%. Last quarter, they'd given a guidance of 6 to 8%. Then to some of the analysts, they said 4 to 6% is the kind of base range that we're working with. But if things pick up, as the management was telling us, Mr. Natarajan, they can push towards 6%. So we wanted to get into a little more detail about North America. US is 8 to 10% of your revenues. Is that correct?
About 10% of revenues, you're right.
US, okay, 10% of your revenue. And you spoke about ordering being very slow on account of tariff uncertainty. So what was the volume growth in US in Q1? And what are you expecting? I mean, is this year going to be a washout? And if that's the case, what happens to your margins? Okay, we'll, try and... Mr. Natarajan, can you hear me? Okay. We'll reconnect.
Yeah, I think we'll reconnect with them. It will be important to know also where, the company's margins are going to be going forward as well. But a lot of development on US front right now, like we mentioned as well. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be coming back with more updates after the break.
Welcome back. We managed to reconnect the line with Galaxy Surfactants. K. Natarajan, Managing Director and CEO of the company, is here with us on Chartbusters. Mr. Natarajan, we were trying to understand the US business. That's 10% of your revenues. Orders have gone slow. In Q1, was there any volume growth? And what is the plan? Is there a risk to your margins if this year turns out to be a washout?
Yeah, so Q1, we did have a volume growth. It was probably about 7 to 8%. We do expect it to go up in the coming months. We are already seeing that happening in this month. More importantly, I think what is required is the premium specialties that need to go up. That actually slowed down. We are seeing things picking up, and it should be on a good track in the coming quarters.
But you spoke about how customers are cautious and orders are getting pushed forward in the US.
Because they weren't too clear about what would be the tariff and what would be the demand for their products, given that it's going to be inflationary. Now, once they have come to terms with that, we are also giving solutions in terms of how we are able to get around in terms of reducing the tariff impact for them. So there's a good amount of negotiation discussions happening with customers, and that's proceeding well. We're also looking at how do we pivot towards our other regions in the rest of the world to be able to soften the impact.
But you're saying you're going to soften the impact for your US customers, which means that if the tariff is settled, say at 25%, not at 50%, you will be absorbing the burden?
No, not exactly, because we also have facilities in Egypt. We'll need to see how we are able to be managing with some supplies happening from there. So various options are being worked out to ensure that we are able to keep our customers, engaged, and we are also able to have no margin impact.
Okay. And just in terms of your supply chain side as well, how is that shaping up? Would that be a concern? What are we watching out there?
The supply chain, not much of a concern now. We did have an issue in the first quarter when one of our key oleochemical vendor had a huge disruption because of natural gas supply getting impacted. All that has gotten better from July. We don't see any significant challenges on the supply front moving forward.
Okay, Mr. Natarajan, out of time. Thank you very much for joining in. That's the word coming in from Galaxy Surfactants. Let's move on and get in a check on the market technicals. Dharmesh Shah from ICICI Securities is now joining in for a quick technical check. Dharmesh, things are very quiet. The Nifty is above the 25,000 mark. Do you see more gains from here? What would the stock calls be?
So good morning, Rima. Yes, definitely. I think so the mood seems to be getting some bit of a change after the announcement of rationalizations and GST rates. I think so that seems to be pumping up the market on the higher side. Going forward, yes, some bit of a resistance seems to be visible at 25,000, but eventually we expect, I think, so Nifty to look for 25,300 in the coming weeks. So yes, it's something a buy on dips market by 24,700 to 24,600 remains to be the very strong support. And if you look overall, I think so the market breadth also seems to be on the better side compared to the last week. So yes, things looks positive going forward. It looks like we are made with the bottom, and most of the negative news seems to be getting factored in terms of US tariff developments. It looks like, I think so, 24,200, 300 looks to be the bottom for the market, and we should be looking for much higher targets. But in the initial terms, I think so we should be looking for a target of 25,300 as far as Nifty is concerned. Coming to stocks, yes, definitely auto as an index seems to be gaining the momentum after the news of GST rates coming down in the coming month where the meeting is expected. So yes, index seems to be witnessing a head and shoulder breakout. And after the 10 months of consolidation among the auto space, it looks like, I think so auto ancillary also looks to be major beneficiaries of the all, where Apollo Tires remains to be a top pick. Now again, the stock seems to be witnessing a breakout from the falling trend line of 11 months of corrective phase, supported by strong volumes and strong base near the 100-day EMA. Looks like Apollo Tires should be looking for a target of around 519, giving a stop loss of 419. Apart from Apollo Tire, again, second stock which we like is the PSU Banking Index. Again, index seems to be relative outperforming in this current corrective phase. We expect PSU Bank Index should see witness a breakout above 7,300 and should be look for a target from 7,700 to 7,800. Inside the PSU Banking Index, Bank of Baroda remains to be a top pick. Again, Bank of Baroda seems to be witnessing a triangle breakout supported by strong support at 200-day EMA. It looks like Bank of Baroda can be looked for a target from 265, keeping a stop loss of 234.
Okay, Dharmesh, thank you so much for joining us on the show this morning and talking to us about individual stocks as well as the market. But let's shift focus to our special segment where we will get you a few ideas from profit from Money Control Pro. Khushbu Rai Gupta of moneycontrol.com joins us now to talk to us about the stock that she has been tracking closely. Khushbu?
In today's idea for profit, we have Nestle India. The company saw above average growth in the coffee business led by the market-leading brands such as Nescafe. Another product segment where Nestle remains a dominant player is the noodles category led by the brand Maggi. The flagship brand saw consistent growth despite higher competitive intensity in the June quarter. The stock corrected following the announcement of the quarterly result due to the consistently weak margins. However, we feel that easing cost pressure and urban demand revival should aid companies' growth in the coming quarters. Nestle is also focusing on strengthening and protecting its high-margin milk and nutrition business, which contribute more than 40% to the domestic sales. The company is also investing into new growth businesses which will drive the business scale. We believe that Nestle is a good play on the packaged food business, and it will be one of the key beneficiaries of the urban demand revival given the consumption boost.
Okay, that's Nestle for you. Get into a break. On the other side, we'll get you stock-specific action. Stay tuned for that. Welcome back. You're watching Chartbusters. We have the entire research team to, talk about the big buzzers in today's trade. And the big one, of course, is Nazara and Delta Corp. Vinny.
Absolutely. We're keeping an eye on both these stocks today. Now, Nazara Tech obviously seeing a sharper fall. Delta Corp has recovered from the day's lowest point. Why are these stocks in focus? The government is likely to be banning that online gaming, especially involving real money. Now, obviously, there was a draft bill that was passed yesterday, and this is going to be picked up in the tabled in the parliament today. So we'll watch out for those updates. But as of now, let's talk about Nazara Technologies first. The real gaming money exposure that they have. they have invested in PokerBaazi, which is where the investment comes in. Currently, they have around 46% investment here. Now, the net revenue of PokerBaazi was around 191 crores. This revenue, as of now, is not included in the total revenue of the business, right? It's an associate company, so that inclusion is not coming in. Now, the management, when they spoke to CNBC, they said that as of now in Q1, there was no exposure, no impact on the revenue. Also, in terms of the losses, that comes in as a loss from associates. So that is what is the impact that comes in, maybe on profitability. But otherwise, on the revenue front, there's no impact. But the risk comes in terms of the investment that they made in PokerBaazi, right, of 800 crores. So that is where the risk comes in, where they may have to write off if this bill is passed or how it goes forward. So that concern comes in on the risk of investment that they've made. Now, other than that, there is obviously a 250 crore investment that they're looking to make through the CCPs as well, convertible commercial paper, convertible equities that will be there of 250 crores. So that also something that comes in, but that is not due for the next 2 to 3 years. And the company has a very diversified business, right? 80% of their business comes in from international market. They're looking at more acquisitions as well. So they're not too worried about this. But yes, the risk of this investment is something that they're watching out for. And just a word on Delta Corp, they also have very minimal exposure to this real money gaming right now because they had, exited most of their part of the business of this online gaming business in 2024 itself. So now they have an indirect exposure through around 5% stake that they continue to hold in that Delta Tech Gaming. So not much of a worry there. Okay, but on that note, let's move on and talk about the next stock that's in focus as well. We have HAL that we're keeping an eye out on, as well as sources are indicating that the Cabinet Committee on Security has approved the purchase of 97 LCA Mark 1A fighter jets, and this is worth around 62,000 crores. What more are the details? What will it mean for HAL? Ria is joining for that.
Well, yes, Vinny, as you said, the CCS has reportedly cleared the purchase of the 97 LCA Mark 1A aircrafts. The order value is expected at about rupees 62,000 crores. The deliveries are expected to start taking place from the second year of the contract, and around 20 jets are expected to be delivered each year. Now, this new order is in addition to the existing contract of the 83 LCA Mark 1A aircrafts that was signed in February of 2021, and the current order book of the total 180 LCA aircrafts now stands at about rupees 1.1 lakh crores, and the current delivery schedule for the existing 83 aircrafts, that in terms of that, the company is expecting to deliver 12 aircrafts in FY26. Now, with this new order, the total order book for HAL is estimated to be over rupees 2.5 lakh crores, and with this, they have already achieved the target that they had set for FY26. The order book target was about rupees 2.5 to 2.6 lakh crores, so they've already achieved it well before the end of the second quarter of this fiscal. At the end of FY25, the company had also said that they have an order pipeline of over rupees 1 lakh crores. This is including these 97 LCAs that we're talking about, and this is expected to materialize over the next 1 to 2 years. So a big order coming in for HAL, and the stock is resultantly higher in today's session.
Thank you very much for that. Let's now turn our attention to these big tech platform companies. Food delivery major Swiggy and Eternal stocks are buzzing. There is a bullish note coming in from DAM Capital. Hormus joins in with the key takeaways.
A bullish note indeed, and DAM Capital has initiated coverage on both Eternal and Swiggy with a buy recommendation. For Eternal, they have a price target of 400 rupees. For Swiggy, they have a target of 515. So that comes up to around a 26% upside for Eternal and a 30% upside for Swiggy. Now, what DAM Capital says is that both of their food delivery businesses, both for Eternal and for Swiggy, have matured, and as a result of which, over the next 3 years, they are expecting improved margins and free cash flows being generated from this business, which will then in turn be able to fund their quick commerce operations, which they are doubling down on currently. Now, Eternal has already turned PAT profitable, but for Swiggy, they are expecting PAT profitability to come in FY28. But for the quick commerce verticals, Blinkit, which is Eternal's quick commerce business, could turn EBITDA profitable by the fourth quarter of this year, while for Swiggy, which is Instamart, that will turn EBITDA positive by the fourth quarter of FY28 is what DAM Capital is projecting. And based on this, they are expecting around about a 42% revenue growth for Eternal and around about a 28% for Swiggy over FY25 to 28. So Eternal is already at a record high, but Swiggy, though, is far away from its post-listing high, which was 617 rupees. Even DAM Capital's price target is well below those levels, but still projecting a 30% upside for both of these names.
Okay, Hormas, thank you so much for that. Keeping an eye out on Eternal and Swiggy as well. But let's talk about the market, right? Again, back to the 25,000 mark Nifty. Now, the problem is that in the last 3 days, we've seen that it doesn't sustain. Every time it reaches 25,000, again, it sees a fallback. And that is what we're seeing right now, also seems like. But flip-flopping at 25,000 and around that level, but very flat in today's trading session, though recovered from the day's lowest point because we opened up much lower at around 24,920, 930 levels. So considerably a 70-80 point recovery from the day's lowest point is what we're seeing for the markets as of now. Other than that, Bank Nifty today continues to be a bit under pressure, down 0.4%. IT, that's the one that's buzzing in trade. Top sectoral gainer there, that's holding on to gains of almost 1.5%.
This comes after a long period of underperformance for, Nifty IT. Nifty IT is down 18% from the start of the year. So some money is just getting moved back into an underperforming sector today. No news per se.
No news per se, but I think it deserves the merit as well because, right, it's been underperforming like you're mentioning. So that is what we'll be keeping an eye out on. The broader end of the market also, muted day of trade, nothing exciting. But keep an eye out on Ola Electric. That's buzzing in trade today, 12% uptick as of now. Other than that, we have Godfrey Phillips. That's managing to hold on to strong gains of 11% as well. So those are some of the movers that we're watching out for. And specifically, in the last 30 minutes or an hour that we're seeing, we've seen Coromandel Universal that is also seeing a bit of an uptick, as well as First Cry. That is also seeing an uptick in the last 1 hour. But with that, we're going to wind down this edition of Chartbusters on CNBC TV 18. Thank you so much for tuning in. Up next, you have Trading Hour.